Hello everyone, my name is Dr. Ashish Dilraj and I am from Department of Commerce, the Bhopal School of Social Sciences. Today we are going to solve few of the practical questions on contract costing. In our previous module, we have studied about the basics of contract costing. On the basis of that, we are going to solve some of the practical questions today. This is the question. Contract completed is 3/4. Work certified is half of contract price. Cost of 3/4 work is rupees 3 lakh. Calculate the cost of total work uncertified, right? So in that question, we are giving few information and we have to calculate the total cost of work uncertified with the help of this information. So first of all, we mention cost of 3/4 work is 3 lakh rupees. On the basis of this information, we are going to calculate the total cost of full work. If this is 3/4 or 75%, what would be the cost of 100%? So cost of full work is 3 lakh multiplied by 4 divided by 3. The total cost of the contract is 4 lakh rupees. You can calculate this with 3 lakh multiplied by 100 divided by 75 also, because 3/4 represents 75% work and we have to calculate 100% of. So either 3 lakh multiplied by 4 divided by 3 or 3 lakh multiplied by 100 divided by 75 will give you the total amount, that is 4 lakh. Now in the information it is given that work certified is 1/2 of contract. The total contract is 4 lakh. So work certified is half of contract price. Total contract price is 4 lakh rupees. Half of it is 2 lakh rupees. So work certified is, in this question, total is 2 lakh rupees. Total work 4 lakh, 50% of which is work certified, 50% of 4 lakh is 2 lakh rupees. Now the total cost of work done, it is given the question, that is 3 lakh rupees. So when we have to calculate total cost of work uncertified, that is 3 lakh minus 2 lakh is equals to 1 lakh rupees. That means the work done by us is 3 lakh rupees, out of which certificate which we received is for 2 lakh rupees. So 3 lakh minus 2 lakh give you the amount for the value of work uncertified, and that is 1 lakh rupees. So in this particular question, the total cost of work uncertified is 1 lakh rupees, and that is the way to calculate the total cost of work uncertified when other information is given in the question. This is question number 2, where we are going to calculate the value of plant. As you can see on your screen, the total cost of plant we have to calculate. At the same time, we have to calculate the amount of depreciation. According to the question, it is given a plant sent to site was returned at a value of rupees 16,000 after charging depreciation at the rate of 20%. Find out the cost of plant and amount of depreciation. That means the value which is given in the question is after charging the amount of depreciation. And what is the rate of depreciation? The rate of depreciation is 20%, right? So we have to assume that, suppose the total value of plant before depreciation is 100 rupees. We assume that when we start the construction, when we bring in the plant, that time opening value of plant is 100 rupees. And as per the instruction, in the question it is given the rate of depreciation is 20%. So we are going to find out value after depreciation. Rate of depreciation 20%, that is given in the question. Value of plant after charging depreciation, 100 minus 20 is equals to 80 rupees. If the total value of plant in the beginning is 100 rupees and the amount of depreciation is 20 rupees, the remaining value is 80 rupees. Now we are going to substitute this value in the equation. If the value of plant after charging depreciation is 80, the value of plant before depreciation is 100 rupees. Then if the value of plant after charging depreciation is 16,000, the value of plant before depreciation is 100 minus 16,000 divided by 80. So when we are going to solve this, 100 multiplied by 60,000 divided by 80, will get the opening value of plant, and that is 20,000 rupees. The opening value of plant is 20,000 rupees. Now we charge 20% depreciation. If you are going to charge 20% depreciation on 20,000 rupees, you will get the amount for depreciation. When you are going to charge 20% on 20,000, you will get 4,000 rupees. When the amount of depreciation is 4,000 rupees and the opening value of plant is 20,000 rupees, 20,000 minus 4,000 is equals to 16,000 rupees. So either you can calculate the amount of depreciation deducted from the opening value, or you can calculate the opening value of plant. The opening value of plant is 20,000, the closing value of plant is 16,000. 20,000 minus 16,000 is equals to 4,000. That is the value for depreciation. So by either of the way we can calculate. We can calculate the opening value, closing value already given. Opening value minus closing value of plant gives you the amount of depreciation, or you can directly calculate the amount of depreciation with the help of opening value of plant, and then opening value of plant minus amount of depreciation, you can get the closing value of the plant. So that is question number 2. Dear student, this is question number 3, where it is given in the question, the information given in the question is prepare contract account from the following information. Material use 31,250 rupees, material at end 10,000 rupees, direct wages 15,000 rupees, direct overhead 16,000 rupees, contract price 1,05,000 rupees. The contract was completed and whole amount was duly received. That means in the previous module I told you that we have 2 time period. One, when the contract is completed in a year. When we are completed the contract within 12 months, that is completed within that stipulated time period. Second, when the contract is going on. It may be for 2 years, 3 years, 5 years, 10 years, depending upon the length of the contract or the work involved in the contract. But in this question, it is given that the whole amount was duly received and the contract was also completed. Then rest of the information is given on your screen. With the help of this, we are going to prepare a contract account when the contract is completed. As per the information given in the question, this is the solution, this is the contract account, right? Particular amount, debit side, credit side. Whatever be the expenditure, it will come under the debit side, and whatever amount we are going to realize back or the closing value, it could be shown in the credit side, right? So as per the information given in the question, material costing 31,250 rupees, that is an expenditure. Then direct wages, the amount paid to employee 15,000 rupees. Then overhead direct overheads are 16,000 rupees. Then to profit and loss account, we have to calculate by material at end, that is the closing value of material, that cost 10,000 rupees already given in the question. Then by contract price, because in this question the contract was completed, so we have to mention by contract price or by contractee account. We can use it by contractee account or we can use it by contract price. That amount is 1,05,000. Then we do the total for credit side, 10,000 rupees plus 1,05,000 rupees. We are going to add this to find out the total. The total comes 1,15,000 rupees. The total of credit side is 1,15,000 rupees. Out of this total, we are going to deduct all these expenditure. Out of 1,15,000, we are going to deduct 31,250, 15,000 and 16,000. So out of 1,15,000, when we deduct these three, the balancing amount is 52750, 52,750 is the profit and loss account. The entire amount is transferred to profit and loss account because we are done with the contract. Because in this question, the contract was completed and the entire amount of profit we can transfer to the profit and loss account. This is the next question for you. As per the information given in the question, prepare contract account from the following information. Contract price 2,50,000 rupees, work certified 1,50,000 rupees, work uncertified 3,000 rupees, total cost incurred 90,000. So the total cost incurred in this particular contract is 90,000 and total amount received from contractee 1,12,500 rupees. The amount received by the contractor from contractee is 1,12,500 rupees. This is the question. On the basis of this information, we are going to prepare contract account. As per the information given the question, we are going to prepare contract account, right? At the top of the format, we have to mention contract account, particular amount, debit side, credit side. The total expenditure incurred in this contract, given in the question is 90,000. So 2 total cost incurred, that is 90,000. Then by work in progress, because the work is not completed in this question, we have to divide work in progress into 2 parts, that is work certified and work uncertified. Information given in the question is work certified is 1,50,000 rupees, work uncertified is 3,000 rupees. So 1,50,000 rupees plus 3,000 rupees, the total becomes 1,53,000 rupees. The total of credit side is 1,50,000 rupees. Out of 1,53,000, we have to deduct the total cost incurred in this contract, that is 90,000. So out of 1,53,000, when we deduct 90,000, the balance amount is 63,000. Two balance carried down. We have to carry down this balance. Two balance carried down 63,000, which is calculated 1,50,000 minus 90,000. So by balance brought down, the amount is 63,000 rupees. This is the amount, 63,000 rupees. This amount is divided into profit and loss account and work in progress account. When we are going to transfer the amount, we have to check the percentage of work done along with the total contract price. So on the basis of the percentage, we are going to divide the amount 63,000 to two account. Number one, profit and loss account, and the remaining is to work in progress account, and on the basis of which we are going to transfer the entire amount. This is the way we are going to transfer the amount to profit and loss account and work in progress account. See, in this question, work certified is 60% of the total contract price. Hence, amount of balance transfer to profit and loss account is, we are going to use the formula profit and loss account balance into 2/3 multiplied by cash received upon work certified. This is the formula. Balance into 2/3 multiplied by cash received upon work certified. Why we are using 2/3? Because the work certified amount is 60% of contract price. If it is less than 50%, in place of 2/3, we are going to take it 1/2 according to the formula. So in this question, that information given is 60%. That is why we are going to using 2/3. So profit and loss account is equals to balance is 63,000. This is the balance amount multiplied by 2/3 multiplied by 1,12,500, which is cash received, divided by 1,50,000. When we are going to solve this equation, we will get 31,500 rupees. 31,500 rupees is transferred to profit and loss account. This amount is transferred to profit and loss account. When we are going to transfer this profit and loss account, 31,500, remaining is transferred to work in progress account. So total work in progress 63,000 minus 31,500. The remaining is transferred to work in progress account, and luckily in this question the amount is same, that is 31,500. So this amount is transferred to work in progress account. This is another question. In this question, information given is, show how you would deal with the material in the A contract account with the following information. Material purchase 20,000 rupees, material supplied from store 10,000 rupees, material received from B contract, that is some other contract, 5,000 rupees. That means from B contract material supplied to A contract, amount is 5,000 rupees. Material returned to store 1,000 rupees. Because of any of the case, might be the material is of low standard or not according to our specification, we are not satisfied with the quality of material, we return that material back to the supplier. So in this question, material returned to store is 1,000, material costing rupees 2,000 were stolen, 2,000 rupees were stolen. Then material worth rupees 100 were destroyed by fire. Then material costing 1,000 were sold for rupees 800, and material in hand is 2,000 rupees. This is the closing value of material. The closing value of material is 2,000, and other informations are given in the question. Material returned to store is 1,000 rupees. That is our material which we have sent back to our store, right? So all these information is given in the question. Now we have to solve the question on the basis of these information. In this question, we are going to deal with material. How to deal with material on a particular contract. As I told you in the previous question, that all the material which we received will come under the debit side. So as per the information, we have to make this particular amount solution A contract account showing treatment of material. Whatever material we have received, to material purchased 20,000 rupees, to material supplied from the store 10,000 rupees, to material received from B contract. That is the another contract of the same contractor, and we have received material from another side that we called it as B side. The amount of material received from another side is 5,000 rupees. So incoming of material in this contract, which we called it as A contract, is material purchased 20,000 rupees, material supplied from the store 10,000 rupees, material received from B contract 5,000 rupees. Now, how we are going to use all these material in this particular contract called A? Out of all this material, by material returned to store, we have returned back the material to store is 1,000 rupees. Then by profit and loss, we have incurred a loss because of two things. Number one is stolen, material stolen. Loss incurred because of material stolen, that is 2,000 rupees. Then by material destroyed by fire, material destroyed by fire is 100 rupees. The total profit and loss incurred because of stolen because of fire is 2,100 rupees. Then by material sold, we have sold out material for 800 rupees. The total amount of material sold is 800 rupees and the actual cost of that material was 1,000 rupees. So the total cost of material for 1,000 rupees is sold out for 800. That means there is a loss of 200. We have sold out 1,000 rupees material for 800 rupees material only, 800 rupees only. That is why 1,000 minus 800, so there is a loss of 200. So by profit and loss account, loss on sale of material, that is 200. We sold out 1,000 rupees of material for 800 rupees. That is why we have incurred 200 rupees of loss. Then closing value of material is given by material in hand. That is the closing stock, that is 2,000. This is with us. So this is the way which we are going to deal with material on a particular contract. This is not the complete question, that is a part how to deal with material. In this question, we solve only how to deal with material, and this is the solution for how to deal with material. So that is all for today's module. We know how to solve the practical questions on contract costing. Thank you everyone.